Hey investors, thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Alphabet. Alphabet just reported their Q4 results. It was a stunner. There's a lot here to be excited about. Um, so about 18 months ago, I called Alphabet I called Alphabet an elephant hiding in plain sight, and I mean this is again the case right here, right now. So 18 months later, it's still the same. Um, Even though so many analysts follow Alphabet, I mean, the investment community has really been off on this one. So, I mean, revenue growth rates are going much stronger than many people expected, and I make the case that paying just 5 times forward sales for Alphabet is really, really a fair investment. I mean, even as we think through the rest of tech and think about some of its growth prospects, there's a lot here to be excited about. Okay, so this is what I want to highlight. I mean, I've been waiting so long to kind of go through and see how the big tech companies were doing. Is there a bear market? I mean, if you follow my stocks and stuff, you've seen that I have been making this case over and over and over again. There's a large discrepancy between the top 5 companies and the rest of the mega caps and the small caps. It's been carnage on one side, lots of the small caps have been just utterly demolished. I mean, like to see many of those really highly innovative names down 60%, it's just been like run of the mill. It's been so many of them. And at the same time, you look at this, like it's incredible. So in Alphabet's 3 months, is like just see a flat line. Okay, it's actually like just like the day before the earnings pop, they were up 2%. It's crazy, right? So I mean, if you've not followed many of the kind of mid caps and small caps, you have absolutely no idea what I'm talking about. But it's just been fascinating to me to watch this. But on the other side, listen, the results here speak for themselves, right? So they put out 32% year-over-year growth rate. So this is pretty damn strong, right? Because here's a few things to think about, right? So analysts were expecting approximately 26%, and they put out 32%. What this immediately tells me is that you can see here in the green arrows, the analysts were predicting that Alphabet be reporting approximately mid-teens growth rates over the next 12 months. That's going to be way out. So analysts are going to be revisiting their models right now, and over the next like day and coming days, they're going to be putting out their upgraded targets. And as a shareholder, this is exactly what you want to be on. You want to be on a stock that is, people kind of like, it's not really doing much, and then they come out and they show that they're really reaccelerating their growth rates. They're highly motivated and still with an entrepreneurial spirit, and they're going to be just upgrading these models, and investors are going to be it's a good position overall to be in. So here's the thing, right? So during the earnings call, Sundar Pichai noted that what Alphabet is investing very aggressively in their AI models is going to help drive the advertising business. So you can see here that Google's search and other business was up 36% year over year. So that's the green arrow right there. Now, why is this important? Because they're saying that their investments in AI is helping businesses that launch a single ad campaign to be distributed via all their different platforms. And for the business that's launching the ad, it's driving more ROI, more click-through rates, and they're giving them data insights into how to iterate their ad further. So I mean, it just puts them in so much, puts Alphabet in such a big advantage. It's really just cutting out a large moat for them. It's a lot to be excited about, but they're not resting on their laurels at all. I mean, you listen to the call; they're really kind of focused and they're highly driven. I mean, they're machines. Now, here's the thing, right? So many people were wrong about the cloud wars. So last time I talked about Alphabet about a quarter ago, I said for the past several quarters the narrative has been strong that the tailwinds Alphabet has seen is in the cloud business. That being said, the profitability, while it's moving in the right direction, for now it's still unprofitable. And this is, I could echo this right here. So we see that continued progression. So they're continuously moving towards break even on the cloud, on the for Google Cloud's operating income line. You can see that that's continuing to move at a rapid rate. So it's quite interesting to say. So this is quite strong on two facts. First, it's going to be probably 18 months or so until Google Cloud is going to be break even on the operating income line, and soon after that, it's going to be a bottom line contributor. Secondly, think about this, right? Everyone was arguing that the cloud wars was going to be between AWS and Azure. Everyone was saying, oh, you don't go ahead and give Jeff Bezos a 5-year head start and, expecting them not to utterly demolish this space. Well, I'm sorry to say, even Mr. Warren Buffett was wrong on this one because, like, as terrific as AWS is, they clearly, I believe in my assertion that they're losing market share to Google Cloud. So Google Cloud was up 45% year over year. So we got the results last week from Microsoft Azure was up 46%. So both of these companies are up 45-46%, very much similar. And it's been a long time since AWS has been up approximately 40%. So the results come out this week. You can see how that performs, but I would be willing to estimate that AWS doesn't reach 45% in when they report for their Q4 results. Right, what's the other thing here? So during the earnings call, Alphabet talked about they're seeing the volume of customers growing at approximately 80% year over year, 2020 relative to 2021. So I've said this before and I'll say it again. Follow the customer growth because customers really know where they see value. And if you see a lot of customer growth adopting a certain platform, that's often more insightful than looking at the revenue growth rates in a particular quarter, because that can be a bit kind of noisy, but the customer really knows what they want. So that's why I really love investing, because everyone was utterly convinced that Amazon was going to be ahead in the cloud game, and now it seems that Google Cloud is taking some market share. And when you think about it, even including IBM, Alphabet was probably the last big tech company to join the cloud wars. And for them to be performing so well here, I think it really speaks volumes for the company. The one blemish in the report was that the free cash flow line, they reported approximately 17 billion in the previous year, Q4 2020, and for this quarter they were only up 8% to 18.5 billion. I don't think that investors will care about that, but I still, I wouldn't be utterly dismissive. I would still give it some weight, because at some point in time, these kind of things like free cash flow generation does come into counting into the models. So it might not matter this quarter. People are pretty excited. I see the stock is up 9% after hours, but at some point you can't just take your eye off, because investing is a high contact sport. Okay, so I look at this and I'm like, okay, so the business is valued at 5 times forward sales. Now, for a business that is essentially a monopoly with a management team that is clearly winning, they're really innovative. They're committed to driving shareholder value. They got the dividend, they call it like the stock split coming up soon. With the antitrust concerns kind of taking a receding step, I think that paying 5 times forward sales is really, really cheap. Now, if you compare this with Microsoft, like I have a lot of passion for Microsoft, right? But Microsoft is priced at approximately 11 times forward sales. Now, as much as Microsoft is amazing, Microsoft isn't growing at the pace that Alphabet is. And along this line, I'm gonna make an assertion here. So you should never forecast when it comes to live events, but I'm gonna make a forecast, which I know I'll come back and regret that. But in 18 months' time, I wouldn't be surprised to see Alphabet taking second place as the world's biggest company again, and displacing Microsoft. They're just cheaply valued. Alphabet, they're growing clearly, very strong operating margins. There's, obviously the balance sheet is just like a war chest. There's a lot going for it. So I wouldn't be at all surprised if people in 18 months' time see that Alphabet is the number 2 market cap company in the world. Anyway, if you want to find out what kind of names I'm buying right now and I'm particularly excited about, don't forget to check out my marketplace. It's called Deep Value Returns. Come over with my marketplace, get involved, see what high quality, actionable investment ideas I'm going to highlight for you. Thank you so much for listening. Bye bye.